what advice would you give an aspiring investor that's 6 to 12 months behind where you're at right now?
Oh, I love this one. I'm a big Tony Robbins guy. I
Mhm.
love coaching and I love actually growing all the time. So I would say align yourself with somebody that's done it. Somebody that's achieving what you want to achieve. Big believer of saying, hey, if you want to go somewhere, find somebody that's done it and pick their brain. Go ahead and take them out to lunch.
I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast, and this is a first deal episode where we walk through what it takes to find, fund, and close a first apartment complex. Now, if you're an aspiring apartment investor yourself, you're probably trying to do the exact same thing. So before we get to this episode, make sure you hit the subscribe button and the little bell below to make sure you get notified every time we post a new episode. And now, enjoy the show. Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show, especially as excited. It's a first deal series episode, and we have Dave Snehal on the line with us today. And not only do we have Dave, but we have made this a open case study for the Tribe of Titans. So we've got a handful of tribe members who are sitting along watching this live as well, and we'll be able to ask questions while we're going on. That said, Dave, thanks for coming on and welcome to the show.
Thank you so much for having me, Brian. Appreciate it.
Absolutely, absolutely. And met at the GOB conference a couple of weeks ago, and that was a great event. Happy to see you here again.
Yeah, I'm a Chicago native, so it was a must to get to that event, and I'm glad I met you.
It's easy when the events are in your hometown. I remember the first multifamily conference I went to, I was living in the DC metro area. It was also in DC, and I don't know if I would have gotten on a plane to go to a conference at that point, but I'm sure glad there was a conference in DC. Yeah, it sure is easy when it's in your hometown. Anyway, that said, let's talk about you. Tell us a little bit about yourself, give us an idea of your background, and walk us into how you got into multifamily.
My background is in real estate since 2015 as a broker. I started on the residential side, bought some properties as an investor as well when I got into the broker duties there. My goal was always to end up on the investment side, whether it was as a commercial real estate broker or definitely as an investor. That was always on my mind, was to buy real estate and not just broker deals and sell real estate. So that was goal number one. That was the primary focus. So started in the single family space a little bit and did some fix and flips, partnered on some of those, and then partnered on a couple buy and holds, and those projects became pretty intensive to manage. And I think a similar story for a lot of multifamily operators. In 2020, our brokerage here, EXP, actually opened up EXP Commercial, which actually allowed me to go ahead and migrate over to the commercial side of the business. And
Nice.
Multifamily was always our love. My father's owned apartment since I don't remember. I mean, I was a kid that was on summer break there that was going to help do unit turns on my dad.
Nice.
It's just coming full circle, I guess.
Nice. So you mentioned the single family portfolio. I'd like to touch on that one because most people who are sitting in your seat start with single family. And you said it got to the point to where, I don't remember your exact words, but where it got difficult to manage. What were some of the aspects that you ran into that caused the difficulty?
We ran into challenges actually just prior to COVID. Contractors and management, having the scattered assets, it does make it a little bit more management intensive. If a roof goes bad, obviously you got to take care of a roof on a house. Anything, if a furnace goes bad, you're paying for that on a house. If it's repair or replacement, either way. These are all calls that you're going to take where it just makes it a little harder. And my goal was always to get into multifamily and have structured asset there that we can either manage ourselves a little easily or implement some property management in there as far as partnering with a good property manager.
Yeah, and that's a good point. I mean, you had assets scattered all over the place, and you mentioned roofs. Obviously, multifamily properties have roofs as well, but you got a lot of units under one roof, which is a lot different. Instead of having 10 roofs on 10 houses, one 10 unit has one roof that's a little bit bigger. What you're saying is you moved in. Don't let me put words in your mouth. Your ultimate goal was to move into multifamily, and part of the reason was because of the economies of scale that you get with multifamily.
100%. And I'm a team player, so I like the aspect of partnering and dealing with a certain role, and then also having other folks that have strengths that can deal with other roles as well.
Mhm.
So instead of taking on the whole project yourself, which is pretty much the role. I mean, I had a partner, single family, but he was more passive, just signing on the debt if needed and whatnot. But more often than not, I was taking care of most of the duties as far as coordinating rehabs and that sort and managing the properties. So it was very labor intensive in that that sense where it's like, okay, do I want to be doing this with, 50, 100 houses? I mean, is that
Yeah.
really practical? I evaluated it and I said no.
It makes a lot of sense. And like I said, a lot of people who sit in your seat have the same realization one day, where I think it's a lot easier for somebody to jump into the single family market. It's a lot easier and maybe it's more of a mental thing. It's a lot easier to buy a single family house and rent it out than maybe a 10 unit. There just, for some reason, there's a huge mental block with a lot of people. Most people start there, but you realize real quick that there's better ways of doing things.
To that end,
Yeah, please
if
do.
I could add, I was just going to say, a lot of people obviously buy their own home, so they're
Mhm.
familiar with that. So buying a single family home is familiar. So sometimes we do what we're familiar with, and that just makes sense to a lot of people as far as starting out. Maybe that was the same thing with me. And then you might think that bigger building is out of reach with 10, 15, 20, 100 units, whatever it is. And
Yeah.
then you just got to open up your mind to it and just put yourself around people that have done that. And then you start seeing things differently.
Yeah, and amazingly, the process is not very different. There's a lot of similarities between single family and multifamily. There's a due diligence period, inspection period. You have the similar contingencies involved. It is definitely more complicated, but it's a very similar process. And you make a good point. A lot of people buy one for themselves, and there's a whole lot of education, and the real estate industry is geared around single family homes for the most part. Buying a single family home isn't a bridge too far for most people, and it's something most people have done. Buying a 20-plex or a 30 unit, that for a lot of people is a bridge too far. And I like how you said it. You get around people who have done it, and that's going to really help you to be able to do it yourself. And I said something I like to talk with everybody about is kind of a motivational question. And really the reason I ask is because I had this big burning why of my own that really helped me, get through the initial steps and initial hurdles. So what is your big burning why?
For me, I don't want to keep running on the treadmill, and we, I think, get into the habit of trading our time for money here because that's what we're, conditioned to think that we have to do when we come out of school or college, whatnot. So my big burning why is I want to spend more time with my loved ones here and not have to trade my time as much for money. And if I can gather assets and also change lives of residents in a positive manner that live in our properties and, provide clean, affordable housing and, do those things and also enjoy time with my family, I think it's a win-win for everybody.
Yeah, absolutely is. I 100% agree. And I think a lot of people, like I said, a lot of people, what you're saying is not brand new. It's similar reasons for a lot of people get into multifamily. And I want to say this is a Warren Buffett quote. Somebody correct me if I'm wrong, but he said something like, if you can't find ways to make money in your sleep, you'll work until you die. It's one of those where you have to be able to finally disconnect the time from the money. And if you can do that, that's where you can actually start to become wealthy. When you disconnect the fact that I have to go and punch a clock to make money. So anyway,
100%.
good.
Yep.
And yeah, spending time with the family, I think that comes up a whole lot. So so let's talk about this deal. 104 units in Augusta, Georgia, and I really like Augusta. I think it's a nice area, nice town. Little city, 500,000. We got 2 assets and maybe 3 coming up here soon there. So let's talk about Augusta first of all. What do you like about Augusta?
So Augusta, fun fact is they make 90% of the world's golf carts there, right?
Ew.
They've got the highest per capita, I should say, of doctor contingent there because they've got 8 area hospitals there. These folks need housing. There's a lot of great metrics. Obviously, the Masters is played out there once for PGA there. It's a growth market. We love the Sunbelt states. All the metrics lined up for an opportunity that made sense for us to join a team on that asset.
I do like Augusta, and me being military, I always focus on the fact that Army Cyber Command was recently moved to Augusta, and that brought about $30 billion of DoD money down to the area, which also attracts a lot of white collar jobs. It attracts people in the cyber careers, which are typically high paid income guys. Great market. Augusta, in my mind, it's obvious why people want to invest in Augusta, but maybe I shouldn't say that because that's going to increase the competition that we have on other properties in Augusta. So let's talk about the team that came together. And you did mention earlier that you're in an opportunity where people have different roles and responsibilities. So let's talk about the team and how this team came together.
So that's a good question. Yeah, I'm actually a big believer in coaching and mentoring. So I did have a coach and a mentor here in the multifamily space. This opportunity was presented through the group. There, it was an opportunity that was sourced through broker relations. I did not source the deal. I was told about the deal, and we looked at it. We liked what the upside was. We looked at it, and I have a partner, my partner Parag, with Synergy REI, our
Yep.
company, and we looked at it together and said, hey, where can we add value to this team? And we wanted to help raise some equity and then also help out on the asset management side. There was quite a
Mhm.
bit of work to do to go ahead and stabilize the property and reposition it. So we
Okay.
wanted to make sure that we were in the thick of things there.
Okay. Now, this is it's a very, very common way to come into things. Somebody gets something under contract. And I think a lot of, if I had to say there was one shortfall in a lot of coaching programs, it's the capital raising piece, where a lot of people don't really plan for that until they have something under contract. When you're dealing with these coaching programs, a lot of times people get deals under contract and they're like, oh crap, I've got to raise $2 million. How am I going to do that? They go out and start looking for other people, bring them in as co-GPs, and very, very common. How far along in the process were they when you guys came into the deal?
We were brought the deal before the PSA. We were actually sent the deal there to evaluate before the PSA was signed. It was something that we looked at for a few days and evaluated it and made sure it met our metrics as to what we're looking to do in projects. And it did. The team, we're familiar with the team there. So like you mentioned, you don't want to come in on an equity raise there when things are getting dire. So we were in it from the beginning there, which is definitely a blessing there on our first
Yeah.
acquisition there.
It's very, very helpful. The earlier you come into deals, the better off everybody is. And I've seen a couple of times where people are bringing equity raisers in last minute, and then there's many reasons why it happens, and there's sometimes really, really good reasons why it happens, but it's not ideal for anybody involved. All right, so you guys came in early on. You met these guys through this mentorship program. They had a deal, presumably with a signed LOI. They brought you guys into it. And by the time the PSA was signed, you guys were like, all right, we're ready to go.
Yeah, yeah, it met what we were looking to do as far as our goals, and we worked out an MOU as far as what our role would be, and everything lined up. And it was one of them things where a lot of opportunities come your way. We've said no to quite a few, just because they didn't meet what we're looking to do and what our model is and what our mission statement is. So it's just like they say, right? You're gonna find that needle in a haystack, and there's going to be other deals that might be pitched to you from other GPs that want to bring you on the team. But if it doesn't fit what you're looking to do and what your mission is, then you might want to not might you really want to say no, right? And just say, hey, yeah, we're looking to do something else. Wish you the best, of course, on this acquisition, but it's not going to be a good fit for us.
Yeah, makes a lot of sense. Makes a lot of sense. And something that goes along with that, you got to know what your criteria is. You got to know what you're looking for. Otherwise, it's really hard to say whether you're going to say yes or no to something. So, yeah, without having your criteria set, this is the type of deal I want to raise on. These are the type of the things that I can pitch to the people that are going to potentially invest with us. And these are things that I don't particularly want. So whether it's asset class, whether it's location, you got to have your criteria so you can evaluate these deals. So
Yeah.
um, so let's talk a little bit about the deal itself. Basically what we've talked about already: 104 units, Augusta, Georgia. So tell us a little bit more about the property and what your guys' business plan is.
So the property, as I mentioned, the previous seller, I'm sorry, the previous owner was having trouble. He didn't have good management. There was 20 plus evictions pending there at our acquisition, and we knew about it. And COVID had the pandemic had something to do with that, obviously. But either way, collections were very low, and that's where we seen the opportunity. Right, we want to go ahead and put in operational efficiencies there with a good property management team and shore the ship there. Right,
Yep.
so that, and along with the business plan to go ahead and we want to do all the roofs. There's 14 buildings on that asset. So we had gotten bids on the roofs and the exterior paint and painting the walkways and balconies and the exterior skin on the buildings there. So we had gotten quotes. Those were the two biggest items on the CapEx, and then of course unit renovations. But just those two items there were a bit out for about 300 grand a piece in CapEx, so about 600 right there, and that's out of our $1 million CapEx budget.
Yeah.
We've got a good property manager that has a great footprint in Augusta that was able to save a substantial amount of money on that roof replacement there. So he got it done for a fraction of what our bid was
Nice.
at 300. So they've got relationships with vendors there locally, and that's been working out in our favor on the roof repairs, as well as the bids that we've gotten for the paint as well on the exteriors.
Nice, nice. So maybe not mismanaged, but it wasn't managed efficiently when you came in.
Exactly.
There's
Yeah.
20 pending vacancies on 100 units. That's a lot. I mean, that can really, number one, if not vacancies, 20 pending evictions,
Evictions. Yeah.
which is going to very shortly turn into 20 pending vacancies. But it's also probably 20 people who aren't paying while they're in the property. So that's a significant drag on a property there by itself, and something that if you guys can cure, it's really easy to turn the corner on that one. Put new people and do some renovations, put some people in. And I love that you're putting an enormous amount of money into the exteriors. I think a lot of people neglect them, especially, I hate to say it, some of the new syndicators are just looking at the interior stuff, and the exterior budget doesn't get a lot of it doesn't get a lot. So, having about half of your CapEx budget to the exterior, outside in approach, I love how you're doing that. Really spruces it up, makes it look a lot nicer.
Yeah.
When did you
It
guys
did.
close on the property?
At the end of April, I believe April 29th. And just to kind of go over
Yeah.
what the folks were going on, what was going on with the evictions there. Some folks were actually eligible for assistance, right? And it takes a proactive property management team to help some of these folks. They don't know how to get assistance. Then some folks just need assistance getting assistance. Rental assistance, that is.
Yeah, right.
So our property manager came in, and we didn't have to evict all the folks. We were able to bring some of the folks that really needed assistance, the help that they needed to go ahead and stay within. They had good payment histories. We were able to keep them on board. So
Yeah.
sometimes, it's not all about just getting folks out. It's about saying, hey, how can we help these folks? There's money out there that's available, that's allocated just for this. So
Yeah.
we actually talked to our property manager, and they were actually very good about it too, and they're proactive. The good thing is there's a complex across the street from us that they manage as well. So that's kind of how we ran into this property manager, and they were doing a pretty good job there. So we interviewed them, and it worked
Yeah.
out where we can bring them on board on this acquisition as well.
So we purchased a property also in Augusta earlier. Actually, it was December 27th, so very late last year. And there were a couple of people who had it was a lot smaller, but a couple of people who had some bad debt. People who had kind of racked up some charges, and we basically told our property manager, let's just wipe the slate clean with these guys, and just tell them if they pay their rent on time, we're going to let them stay. And one of them we ended up evicting, but the other one has been a model tenant since. So it's one of those where you don't want to be heartless and just kick people out. You try to work with them the best you can, but also realize you're not running a charity. But yeah, we were able to do that pretty easy, and just I don't care what your relationship was with the previous owner. I don't care if you didn't pay him, but if you pay me, you can stay. And like I said, we had two in that situation. It's a 26 unit, one paid, and like I said, has been extremely diligent at that. And the other one, like I said, we ended up evicting. So so let's talk about the capital raise. Was this your first capital raise?
This was, and it was a great experience in the sense of you learn a lot, right?
Yeah.
You talk to a lot of folks, you let them know what you're doing, and when it comes down to ponying up and putting money into a deal, a lot of folks that you talk to will say, oh, it's not in our backyard. I'd like something a little closer to home, and they're gonna fall off the map. Let's put it that way, right? So you've got to kind of be able to pivot. So if you've got a raise, my best advice, and I'm sure you already know this, Brian, but is if you've got a raise, probably times it by 3 on what you need to raise, and gun for that rather than just whatever you got to raise. So that's one of the things I learned, and then also keep talking to folks folks and educating them. That's the biggest thing. And I think we were a little behind the 8 ball on that, but then we caught up pretty quick.
Yeah. The first raise is an eye opener for a lot of things. And I think everybody walks away with, wow, I'm going to do that differently next time. Or, you know what you need to do for the next one. You know what you need to do to prepare for the next one. And you hit the nail on the head. There's a lot of education that comes in with raising capital, because especially on the first raise, a lot of people that you're talking with are close friends and family that may not have ever invested in multifamily before. And so, for them, it's brand new. And so a lot of it is you have to get them over the fear of the unknown. You have to get them over it's not in my backyard. And that's all education. So, when you're going into your second deal, your next raise, how are you going to do that differently now? What are you going to do differently now that you have this experience behind you?
So that's a great question, because we've got a process flow now. Education is key, right? We're even with friends and family, no matter who it is, who we talk to about investing in multifamily as a passive investor. We want to go over. We actually have a webinar that we put together, and it goes over how syndications work, and also what the benefits are for LPs, or limited partners, to come on board. So once that's done, at least they have a framework, right, of what deal structure looks like. I mean, syndications have been around for a little while, but they haven't been around for that long, as far as everybody knowing about them. So they're getting more popular, obviously. So education, we find, is huge, letting folks know, and then also showing a sample deal. And we've got this deal, and we've got also mentors that have done our deals that we could use as examples on what we like to target. So just go over those kind of deals, and then projected returns on what we look for as far as metrics and KPIs that we like to see, and operational efficiencies, and how we source an opportunity and say, hey, this is something that could possibly work. So we'll go over that with them before you even have a deal. And I think we talked about this at the GOP at length as well. And they say that get a deal and the money will come, and that's not true. The money doesn't come. So definitely always be raising. I know you guys were on stage preaching that, and I was like, yes. 100%.
Yeah, that phrase came up once or twice. Jay Scott did a really good job at moderating, and he kept on, that phrase kept on coming up. Always be raising, always be raising, always be raising. So that was interesting. That was a good. I'm glad he did. I'm glad he did.
Yeah.
It was a good thing. What was the total capital raise for the deal? I think it was an $8 million purchase price. Is that right?
So we were at 8.4 on a purchase price. Okay. And then also we had $1 million in CapEx that we're putting into the project. So our raise was just under 3 million on equity.
Okay. All right. Yeah. So, and that's right about the sweet spot. Typically, when we're looking at numbers, we're raising somewhere between 30 and 40% on value add. So whatever the purchase price is, 30 to 40%, and you guys are right in the middle of that. $8 million purchase price, I'd expect about that. So $3 million to raise to get into an $8 million property with $1 million CapEx. Now you closed in April. Now, don't mean to put you on the spot. I didn't tell you earlier that I'd ask about the loan. So hopefully you got the information. Tell us about the loan.
So the debt, that's a great question, because we were actually supposed to close in March, but a lot of things changed in the capital markets in March, right, when that rate hike came across. And we were at a pivotal point in that deal where the terms changed with our lender. So we really had to make some decisions on what we wanted to do to move forward. And we had to engage another lender, and the seller was a little difficult on working with us towards an extension, and wanted more money to go hard in order to extend. So this is the stuff that you have to kind of be ready for, I guess. And a lot of folks don't talk about this, and there's a lot of posts that hey, we did this. But I think I love talking about the pitfalls. I love talking about, hey, this is how we were able to overcome. We were able to go ahead and engage another lender and actually get better terms than the original lender, and the capital stack worked out where we can go ahead and still have great returns for our investors that we're bringing on, and complete this deal. Whether the situation in the middle of March there was, hey, did we just cancel this deal and lose our earnest money? That's hard. Or let's see if we can save this deal and see if we can get some terms that are favorable. And it just so happens that we were able to do that, save this deal.
It doesn't take the Fed to raise rates for debt markets to do weird things. When you're underwriting things, when you're looking at that, you've always got to look at that loan as, until you got the money in the bank, everything on that loan paper can change. They can change the amount of proceeds, they can change the rate, they can change some of the terms. Keep that in mind going through. And this year has been difficult to, in some areas, to acquire debt. I think we were looking at one where a lender pulled back and said, we decided not to lend in this state anymore, and it's just why not? I mean, lots of things can change, especially in the type of economy we're in right now.
Oh, I was going to say, lenders are doing some quirky things right now, and they're mitigating their risk the best they can because there's some uncertainty there, and you just got to be ready to pivot and see where you make some adjustments.
Yeah, absolutely. When did this? Because the deal closed in April. Besides the loan terms changing, were there any other big hitches? Getting to the closing table?
Just the seller not wanting to be flexible on extending with us, and then wanting another substantial amount of money added to the earnest money, and that going non-refundable right away as well. So that was a hurdle. Due diligence was pretty smooth. We understood what we were getting into as far as the project, so that was fine. And then vetting the property manager. We had originally planned to, actually two of our partners on this deal have assets in Atlanta, and we were going to use a property manager based out of Atlanta, where the new lender mentioned they want somebody specifically with a footprint in Augusta. So we were able to find somebody find a property manager, I should say, that had a great footprint in Augusta, and they're actually managing the complex next door. So it worked out great.
Nice. Closed in April. How have things gone since closing?
No, great question. So we're down to 5 evictions left. Either folks have been brought up to current or evictions have been processed. Our pre-leased occupancy is up to 93%, down from we were in the low 80s when we acquired. So we're rocking and rolling. 12 out of the 14 buildings have new roofs, so CapEx is going great. We've got the bids for the paint work. We've actually rebranded the property from Thomas Ridge Luxury Apartments to the Regency to go ahead and get it a fresh look and a fresh feel in the community there. So we're doing a grand opening there soon. There's a mall there that they're redeveloping there, and there's going to be a substantial amount of money that's put into that area there where the property is located. So we're excited about that. There's a lot of great things happening in South Augusta to go ahead and revive that area of Augusta.
Nice. Yeah, and like I said, I'm really bullish on it, and that many roofs in that short of a time, and I know you guys got a really good deal on it. Somebody once told me, and this is something I picked up at a local RIA from a flipper, that he's one of these guys that do hundreds of flips a year. One of the things that his key metric is how fast are we spending our money? And he basically said that he wants to see money fly out the door, because the faster they're spending money, the faster they're flipping. And that's one thing that, as long as you're spending the money on the things that are on the budget, that's one of the things that I've started realizing is absolutely true in multifamily is you want to spend that renovation budget fast. The faster you can get to that $1 million, provided you're not wasting it, the better things are in the long run. The fact that you guys are, a good portion into your $1 million CapEx budget is a good thing. I would hope.
And the greatest thing is we're below budget. That was our projected budget, and we're coming in with our property managers. They're rock stars. They're coming in with bids well below what we projected and the bids that we had during our due diligence, just because they do have these vendor relations in the local market. So it's working out where, we can hopefully go back to our investors and just say, hey, we didn't have to spend $1 million on this, and we're looking good to be able to make good on that.
Here's some of your money back. That's always a fun thing to do. We didn't have to spend it. Here's your money back. Things have gone fairly well so far since closing. Love to hear that. So a question I'd like to ask everybody: what's next for you?
We're always evaluating opportunities, right, where we can add value to an acquisition. And really what's next for me is outreach on our equity raising campaign there. So I mentioned before that educating folks that this is a great vehicle that you can take advantage of tax benefits, and also stable returns generally, as long as you got a good sponsor team there and a good asset, right? It's backed by a hard asset unlike the stock market or other investments, right?
Mhm.
So crypto. So yeah, this is a great vehicle. I just my goal and my mission is to educate more people about it, and say, hey, this is an investment vehicle that's available to you, and we would like to be a facilitator of that if it's something of interest.
Love it. Love it. And what advice would you give an aspiring investor that's 6 to 12 months behind where you're at right now?
Oh, I love this one. I'm a big Tony Robbins guy. I
Mhm.
love coaching and I love actually growing all the time. So I would say align yourself with somebody that's done it, somebody that's achieving what you want to achieve. Big believer of saying, hey, if you want to go somewhere, find somebody that's done it and pick their brain. Go ahead and take them out to lunch. Go ahead and be a fly on the wall. And just if you have to work for free and just, I mean, you'll reap so much knowledge and so many benefits from even just doing that. If you're if you're just starting in the space and you can't afford coaching or a program that that you like, that you want to be a part of, that's fine. Just do things that say, hey, where can I help you? What can I do for you? What do you need help with? And I'm willing to do whatever. And just show your value. And at some point, you're going to get the knowledge that you need, and really it will be for you just maybe doing a little bit of free work, or maybe getting paid a little bit of money. But all of a sudden now you've got this knowledge base from somebody very experienced that's doing what you want to do.
And I would say keep asking too. I mean, keep asking. I've had points in my career where people have asked me, hey, how can I help you? I'm like, yeah, we're good right now. But on the flip side, I've had
Yeah.
people ask me at just the right time when I have a specific pain point, and then all of a sudden it's like, yeah, I'll let you do some stuff for me, but keep on asking, letting people know what you can do, what your skill set is.
Yeah.
And, you may find, 2 months or 3 months goes by and the same offer is going to get a completely different answer. So very much appreciate that.
Yeah,
Last
and
question.
just to
Oh, good.
add
Yeah.
to
Yeah.
that real quick, I would say if that person that you're asking can help you,
Mhm.
maybe they know somebody that you can add value to, and
Mhm.
just say, hey, somebody that can help. I really want to get into this. I actually just got a call about that yesterday of a young guy that wants to, actually his dad owns a bunch of single family homes over here, and he called me. He's like, hey, my son wants to do what you're doing.
Mhm.
I'm like, well, what is it, multifamily? And he's like, yeah. Yeah, he doesn't care about the single family homes as much anymore. I'm like, all right, let's get on a call. So if you're asking somebody and they say, I don't need anything, I'm good for now, like you said, keep asking. And then also ask them, because they usually know somebody else in the space that maybe might be able to use your help. Maybe say, hey, you know what, call this guy. He was mentioning that he needed some help here. Maybe you can pick his brain and let
Yeah.
him know what you can do for him
Yep.
or her.
And I would say that works in capital raising too. If you're trying to raise capital and you're talking with a potential investor, always ask them the same question. Hey, do you know anybody else who'd be interested in this opportunity? And
Yeah.
that opens a lot of doors. All right, last question. How can listeners learn more about you?
So I'm increasing my presence on LinkedIn. Dave Snehal, of course. I'm on IG as Deal Source Dave. I'm not too active on IG,
Mhm.
but and then Facebook, of course. I'm in a bunch of groups, and I like to interact with folks on there as well.
All right. So Dave Snehal, find him on LinkedIn primarily, Facebook and IG as well. Hey, well, Dave, thanks so much for coming on the show. Very much appreciate the value you were able to add today. And good luck getting into your next deal.
Yeah, thanks for having me on, Brian.
All right. Hey, if you like that episode, make sure to subscribe. But more importantly, if you haven't joined our multifamily educational community yet, which we call the Tribe of Titans, you are missing out. Get 30 days free by clicking the link in the description to this episode, or go to thetribeoftitans.info, and we'll see you there.